All right, everybody. Sorry about that. A little late this morning, but good morning. Welcome back to today's midweek market breakdown. Last week, I was actually really busy. As you know, it was 4th of July, and that's a holiday last week here in the US. And my godson was born actually in the 5th, on the 5th. So I didn't have a chance to do my midweek market breakdown last week. And also, I was told the my interview with Etienne Cret from DesireToTrade.com actually came out last week too, and I've been getting some positive things about it, and I think you guys should check it out. And there's other people there too that you all could learn from. If you guys are into those kinds of things, experiences, especially for new traders. If you're new and you're just trying to discover this whole world of trading, it can be pretty challenging, and usually it takes listening to some people talk about their struggles to kind of help you get through the day. Anyways, so let's go ahead and get started. It's actually still pretty slow. Obviously, with what's been happening in the markets lately, there's not been too much opportunities, and it is summer, so that's one of the reasons why. But let's go ahead and get started. Let's get started in the euro dollar. We'll go on the daily chart. So we have that. Of course, we all know what this was. Let's go to the 240 chart. And kind of messing up my charts, but see this. Let's go to the 60. This probably be better seen on the 60-minute. Okay. This is a little funky looking, but we could have a possible Hartley pattern right here. It's a little bit funky looking because of these two candles right there, but it looks like this. Get to that 127. Might be a little bit less than a 1-to-1 to first targets. So about around 59 pips of risk for this specific one. Let's go to dollar CAD. We're still kind of in this range for this pair. Let's go to our 240. Okay. Nothing much there. Looks like there was a really good deep Gartley over here that it did hit targets already though, and it did pass the X legs already, so it's not something I'll be interested in. Nothing there. Maybe 60. Let's see, this is we could have a possible bull bat pattern right here. Let's see. About Still pretty far from there though. Still about over 100, so still pretty far. But if that happens and we just get a wick down to that 186, the other thing we could have is a sea leg of a possible cipher pattern. And that would look like this. Cipher, as long as we don't close below that right here, actually 1414, we could still get that, but that's still ways away, so you can put that on your notes, but not, it's probably not going to be till next week that we see that. So let's go to dollar yen. All right, if you see, we know this event right here, but what I want you to look at is that during this time, we don't know what the decision was going to be, but it price still respected that level that we have right there. And that's very powerful stuff. That one of the main things that you want to know when you're trying to or you want to go into trading is to actually learn how to look at price action, the structures, and it would show you a lot of things. Even during those black swan events, you'll see that most of the time price still respects certain levels of structure. So we're in the 240. Let's see. This could be a possible bear bat pattern. A lot of people don't like this kind of move though. For a leg of a pattern, that's a little too drastic. So, but if you know it does hit our fib levels, so this is how it would look like for that pattern. It's still about, there's a few more. Oh, still about 143 pips away. That's probably about more than 100 pips of risk. So about 196, almost 200 pips of risk to do that. So that's, if you're okay to take that much risk with your trades, then you can take advantage of that. If not, then stay away. The other thing that I do want you to see though is on our around our 886 level is the 106 even right there. Now, and the 106 even is also where we have part of that zone of structure. Now, in this 60-minute, you notice also we have kind of this consolidation right here, this area. So usually what you see happening in that types of area is to for price to kind of bust up to next level of your structure. And the other thing that, if you notice, is we're also having some divergence happening right there. So if I see an opportunity right here, if price comes up and close above this, and I see an opportunity on a lower time frame that I can take advantage of, I will take advantage of this kind of move and kind of just have an open target to the 106. around the 106 area, I should say. But at this time, though, putting stops in these kinds of moves is a little bit hard, and I don't have any plan for putting stops on these moves yet. So that's something I'm not going to take advantage of right now. But if I do find a lower time frame opportunity for this kind of trade, I probably have an open target to around the 106 area. So those are the kind of things that um, you can start to look at. Obviously, you always have to do your back testing once you get um, your rules before you start trading those kinds of trades. Next one we have is pound dollar. Really nothing here. And we get the Aussie. Aussie, we have, yep, we have this possible bear Gartley pattern in the Aussie dollar, and it looks like this. This is a daily pattern, which means that you will have to have more than 100 pips of risk usually. So this is really not something that I do trade. I don't trade off of dailies. So about 136. I don't trade off of the dailies, and I don't take that much risks with my trade. But this is a valid pattern for those of you who can tolerate that kind of risk. And let's see. Nothing there. 60. Oh, nothing there. This candle kind of messed me up a little bit. So let's go to New Zealand. New Zealand, we're testing that structure zone right here. See if we have any opportunities. Okay. Do have a possible possible bull cipher pattern right here. Double check. Yep. Okay. So about, let's see how much. So about 200, 194, 200 pips. So it's still ways away. New Zealand usually moves a little bit slower than everything else. And that's about 106 of risk. A little bit, it's more than 100, but it's not too much. It's not like a daily. So 130s. Ciphers usually have less than 1-to-1 ratios for first targets, although second targets usually is a little bit better than a 1-to-1 ratio. So about 170 to second targets. Let's go down to 60. Nothing there. Let's go to pound yen. Pound yen. All right. Nothing there, so 60. Not quite. Next we go to our last one. Euro yen looks about the same. Let's go to Euro yen on 240. Same thing that we had with the dollar yen. This it's most likely would be, actually did not hit it, so that's not a right one. But the same thing with the dollar yen with the euro yen right here. We do have a structure right here the price can go back into. Now the other thing that euro yen is the same thing about the 121 area. If you take a look at it over here, it's about the 121 right here. If I do find a trading opportunity around this level right here, if price comes back down to this area of structure, and in a lower time frame, I get an opportunity right here, I would have open targets to around the 121. Probably below that because that's an even handle number, that zone for targets. But that opportunity is not here right now, so we play the waiting game. And it's about the same, that consolidation that we saw on the dollar yen. That consolidation right there. And that's it. Like I said, pretty slow markets, and it is the summer, so that's okay. We have half of the year left to trade, so no worries. It's a good time to do back testing, however, and to start learning structures and patterns. So go ahead and just have at it. You can get a lot of times day trading, or I'm sorry, a lot of time um, just practicing your skills. And then when summer's done, around after usually around September, when it starts gaining back momentum, then you have a strategy ready. So until next week, I'll see you guys, and good luck.